Central Bank of Nigeria makes fresh injection of $210 million in the interbank foreign exchange market. Securities and Exchange Commission SEC seals company over illegal fund management. Stock market rebounds, shaking off election jitters as crude oil rises for a fifth day Tuesday. Details of these and more on this edition of Business Express, reaching you on the network service of the Nigerian Television Authority. I am Amina Nujain. Welcome to the program. Authorities at the Nigerian Stock Exchange NSE will this weekend launch a new trading platform for collective investment schemes, CIS, otherwise known as mutual funds. The platform is expected to facilitate electronic transactions with seamless connections among key parties in transactions, including the exchange, Central Securities Clearing System, stockbrokers and fund managers. The NSE says the new platform aims to improve and enhance access of listed mutual funds to investors. It also expected to engender listing of more mutual funds at the exchange. This edition of Business Express will focus on election postponement and the capital market.
The equity market on the Nigerian Stock Exchange NSE rebounded Tuesday, the second trading day after the election's postponement to a positive territory, shaking off the election jitters which led to sell-off of shares by investors on Monday. The NSE All-Share Index rose 0.7% to 32,406.18 points due to buying interest in bellwether stocks, with Zenith Bank leading the bullish train after having lost 1.6% on Monday. Market capitalization increased 80.6 billion naira to 12.1 trillion naira, while year-to-date gains settled at 3.1%. Activity level also strengthened as volume and value traded improved 55.4%.
In the studio with us today, we have Sheyinde Adenabe. He is with Standard Union Securities. Glad to have you join us on Business Express today.
Thank you very much.
Now, talking about postponement, would you say it put pressure on the stock market?
Yeah, thank you very much. That's very correct. Definitely, expectations were dashed. So, it becomes a situation where many investors are now jittery on what to do. Should I hold on? Should I sell? Should I raise capital? Many things happen. So, definitely, that's why you see that immediately after the postponement, the market just went flat.
Okay, in situations like this, what would the right action be for investors who have jitters?
Well, it is a situation where we have to let them know that the situation will not remain like this forever.
Okay.
More so that elections have been taking place in Nigeria, they've been coming, they've been going. So our advice to them is that every investor should just keep their calm, keep their cool. The storm will be over and Nigeria will remain, and the stock market will be better for it, because the stocks market, I mean, you see that the prices are still very low. And if you rush out now, that means by the time the stock market starts picking up, you cannot get it.
So that means for an investor, strategizing right now is key.
Very, very key. This is the time to take a strategic position in the market, because after the wave of the elections, there'll be stability, and once there's stability, investors' confidence comes back, security is there. The next thing is that all the prices will be moving up. Take also note that we will soon be having a release of so many corporate actions, releasing of results for corporate performances.
I will get to that. But for now, still going into the reactions following the postponement of the elections, the Naira weakened. Stocks fell on the first trading day after the postponement. Then we have a situation where bond yields rose. Now, can you paint a vivid picture of what this means?
Thank you very much. You see, just immediately after the announcement, people were caught unawares, and the market, both the money market and the capital market, went down. Why? Because a lot of people who were trying to take position before the postponement, they felt very bad. They could not interpret what has really transpired. Is my money safe? Is it not safe? Should I wait? Should I continue? This has been the issue. So for bond to rise is to tell you that it's a tenured instrument. It has maturity time, you know. So even if whatever happens, it doesn't really affect bonds yield drastically, because it's a debt instrument which has, either you like it or not, the tenor is there, the rates are also there, and for every investor in the market, they will know that, well, I still have so much a year to go before the maturity, so they can still move on. That's what happened. But for equity holders, you know, they are always very, very careful and conscious of where to put their money. And because the announcement made it possible for people not to really have confidence immediately. You know, it's just an immediate thing. And that is the immediate reaction. You know, market thrives on information. And that information was very negative. That will happen.
Okay, still talking about that. The week before the postponement, there was a build-up, and the week after, that's Monday, it was red. It seems the jitters were shaking off on Tuesday. What does that tell you?
Yes, you see, a week before the postponement, people were taking position strategically. And that is not to tell you that, well, at a point, people want to have a, what we call gains of the market. So on Tuesday, those that have put in money previous week, they felt, well, if they are postponing the market, the elections, the best thing for me is to at least let me cut short whatever loss I might incur. Let me take advantage of the rise I've experienced in the few days. Let me take some money back. That's why you see a lot of sell-off went in, and people really gathered money. They raised money for that Tuesday, and let me tell you that it's just for a moment.
If I would ask you to describe the relationship between the political environment of any society and the stock exchange, what would it be?
Well, I would say it's a symbiotic relationship, such that you cannot extract one completely from the other, meaning that they are just too interwoven. How? Whatever happens to the political setting of any country will have a reverberating effect on the capital market, because investors always want to put their money where it's safe. And when
but naturally, business is a risky thing.
I agree.
So if situations come and go, is the risk factor still not there?
Yes. You see, that's the difference. It is a risk. Life itself is a risk. But when we talk of the capital market, People want to invest their money because it is equity. You know, they take position, they come in and go out. They want to buy low, sell high. And when the signals are there that the political atmosphere is not conducive enough for them to retain their investment, they want to cash out. And that is the truth. And what even more, like the postponement of the elections. For example, many people, let me tell you, there are some even traders who have prepared their wares to go and trade, to sell on the election day at the venue. For example, people selling water, and they have bought so much, now you cancel it. What happened to them?
Okay, little trading, little transactions,
yes,
like that. How does that impact investors and stock exchange and equities?
Do you know that these little investors have, one way or the other, have traced their money back to the capital market? Because you sell whatever where you have, the money from there, you want to diversify and put some in the capital market, no matter how small. It's a market for everyone, you know. But when the jitters came, the unexpected also came, they could not even know where to go. So many people that brought in perishable items for that day, they made a huge loss. Okay. Do you know that? People who had shifted their wedding to the next Saturday, do you know that there's problem?
Okay.
A lot of things, it's a chain reaction, and there's no way you see that it will not affect the capital market. What of travelers? So many things. Okay.
Let's talk about sectors. It seemed like the financial sector was reacting at some point. Which sectors do you think will do well now, and which would suffer?
For now, let me tell you, you know, the financial sector, being a purely service oriented, cannot really suffer much, because either you like it or not, whether they postpone election or not, people will spend money, and they need this money from their banks, either through their ATM, through their mobile transactions. So whichever way people take, the banking subsector are making their money. Do you understand? But I want to say that the sector that will be worst hit are those of manufacturing, producing, because one way or the other, the producing line will be cut off when there is no patronage as much. So in essence, it will now bounce back to their profitability level. So mostly the financial sector will be doing well. The oil and gas too will also have a beautiful impact on it. But producing all these food and beverages, because they are producing, you know, they will be having some little challenges.
Okay, now looking at previous elections, 2011, 2015, how would you describe the reaction of investors pre and post elections?
Thank you very much. You know, pre-elections, especially for 2015, there was so much apprehension. And because of that one, a lot of investors, especially the foreign investors, they went away. They sold massively and went away. Why? Because they could not really fathom what would likely be the end of Nigeria. But thank God, it came and went. Same thing this time around. There is a kind of difference, because people are now trying to check and see the historical background of elections in Nigeria, about postponement, this and that. Now, you see that a week to this postponement, you can see that there was a serious
build-up.
Why people were taking positions, because they believe that whatever happens during the election period, it's just a phase. It will go out and people will come back to the market. That was why you saw many people really pumping money into the market. So pre-election, it has been very, very worthwhile, you know, for the stock market.
Okay, do you see the eventual outcomes of the election impacting the equities market?
Yeah. If the elections were concluded, no crisis, no violence, no bloodletting, definitely the market will be the gainer. Why? Because considering the fact that it's even coming when most companies will be rolling out their year-end results. So it gives the investors opportunity to cash in into that period. 2, it is also a period when people feel that once there is stability, the prices you see now are very, very low.
FDI comes to mind.
Yeah.
Foreign direct investment.
Exactly. And they were, in fact, you know, now we have heard that if care is not taken, America will be having some challenges financially, you know, they might even go into recession. So what do you think happens to foreign investors over there? They are looking for countries like Nigeria, because Nigeria has been seen as one of the countries or market where you can easily make huge money from your investments. So there will be a deluge of foreign direct investment into this country. Foreigners and foreign investors, they will patronize us, either we like it or not.
In closing, the elections are coming in the first quarter of 2019.
Yeah.
What should we expect in subsequent quarters of 2019?
Yeah, thank you very much. You see, if volume of transaction is going to be very huge on the first quarter, I can tell you that it will be much more by the time you now combine both the local investors and the foreign investors, you know, activities combined together. But in the third quarter, there might be a little, you know, sludge. Why? Because many want to go on holidays, you know, and when they come back for the last quarter, it's going to be a spiral movement of prices, and the stock market will be the gainer.
Good news for the equities market
For
then.
sure.
Sheyinde Adenagbe of Standard Union Securities, it was a pleasure having you on Business Express today.
Thank you very much.
At the close of trade this Wednesday, figures from the Nigerian Stock Exchange shows that market closed in the green for the second straight day, Wednesday, 20th of February 2019, as the OSHA index gained to close at 32,614.06 with market capitalization at 12.1 trillion naira. Investors exchange 443.7 million shares valued at 5.6 billion naira in 4,697 deals. Let's now join Bossade Abel for an update of global stocks.
Stocks opened trade 20th February on a positive note. African stocks started trading mixed. Tunisia's Tunidex, South Africa's JSE Africa Top 40 and Namibia Overall Index opened positive, while Ghana's GSE and Nairobi All Shares started negative. European stocks were higher in early trading amid rising hopes the world's two largest economies could soon secure a trade deal to end a protracted dispute. DAX rose 0.72%, FTSE 100 0.35% and CAC 40 also topped 0.27%. In Asia, major markets closed higher on Wednesday after U.S. President Donald Trump mentioned once again that a closely watched trade deadline in March may be pushed back. The Shanghai Composite Index gained around 0.2%. 0.8%. Hong Kong's Hang Seng Index rose about 1.01% in the final hour of trading, and Japan's Nikkei also rose 0.6% to close at 21,431.49. United States stock index futures were mixed in early hours of trade, with market participants monitoring the latest round of trade talks between the world's two largest economies. The Dow Jones Industrial Average futures were 19 points lower, indicating a negative open of more than 21 points. Futures on the S&P 500 and Nasdaq Composite Index were both seen little changed from the previous session.
Oil prices rises above $66 for a fifth straight day as 1 kilogram of tomato decreased by 2.39% at the end of January. Let's take a look at the commodities markets. And now a look at the money market. The Central Bank of Nigeria has made a fresh injection of $210 million into the interbank foreign exchange market in its determination to boost supply in the sector of the market. Figures released by the bank on Tuesday indicated that it offered the total sum of $100 million to the wholesale segment, while the small and medium enterprises segment received a sum of $55 million. The invisible segment, comprising tuition fees, medical payments, and basic travel allowances and others, also received $55 million. On that note, we take a look at how the Naira is trading alongside other major currencies. Of this edition of Business Express. Be informed that all previous episodes are available on YouTube, and our Twitter handle is NTA News Now. Remember to join us same time, same station on Friday. I am Amina Nujane. Thank you for watching.